So as I said, why not have a crack at investing and see how it goes? You know what I mean? I know that's even though the challenges of it has, it's something that I think it comes out also as a bit of a passion as well, also maybe a bit of an enjoyment of investing. I know it's a bit of you have to enjoy what, if you're investing, you might as well enjoy what you're investing in.
Absolutely.
You know?
You're listening to Property Investor Tales, stories from the front yard. Here's your host, Tabitha Bright.
Hello and welcome to Property Investor Tales, stories from the front yard, where I get to speak to property investors from around Australia about their investing journey. My name's Tabitha Bright and I'm the head of coaching here at Positive Real Estate, where we help people build wealth through property. With over 8,000 clients across Australia and New Zealand, there are some incredible stories to tell, which hopefully make your investing journey that little bit easier and will inspire you along the way. So my guest today is Andrew Buey, and we discuss losing your job when you're about to settle in off-the-plan property, realizing that his superannuation wasn't going to be enough, and then the joy of owning positive cash flow property. So enjoy this conversation with Andrew. Hey everyone, and good to have you here. Today I'm talking with one of our long-term clients, Andrew. Initially, Andrew, you were based in Canberra, so welcome to the podcast first of all.
Thanks, Tabba. Glad to be part of the podcast. Thank you.
Fantastic to have you here. So, Andrew, you were in Canberra initially, and then you've moved to South Australia. So, but you've stuck with the same coach, haven't you? With Karen moving interstate. And before that, you were with one of our original coaches, Naomi Beaumont, who.
Right.
Yep, who was with Positive Real Estate for a good 10, 15 years, I think, something like that. And then you've moved to Karen. And so you joined back in 2011, I think we were working out approximately. And over that time, you've acquired a portfolio. So you've got 6 properties in total as part of your portfolio in that time, which is outstanding. And that, you know, that puts you in the 0.08% of Australia, which is pretty amazing when you think about it. I was having a chat with Jason Witten the other day, and we have our 1% club. So when clients have 3 or more properties, they become part of the 1% of Australia that holds 3 or more. At 6, you're part of the 0.08%. So it starts to get really skinny. The air gets thin up there. So, you know, you really are incredibly successful, whether you know it and it feels like that or not, to have achieved that 6. So congratulations. That's super exciting. And so starting off, let's hear a little bit about you. What do you do for work?
Yeah, what I do for work. So I'm as a system engineer working for the defense subcontractor. So I've been doing that for maybe a good, say 15 years now. So yeah.
Right.
So yeah.
Fantastic. And we were chatting before. It seems to me like we get a lot of engineers that seem to join our program. And once again, I was chatting to Jace because it's really interesting when you're coaching people. Some people are big picture and some people are detailed. And I generally find, and I don't want to be wrong and cast dispersions, but generally, I find engineers are very detailed people. They like numbers, they love spreadsheets and formulas and so forth. Would that be true about you?
Absolutely, yeah, definitely numbers and of the formulas and of the planning and sort of working out the big of the looking at that. You said looking at the big picture, trying to think what is our need or what are our requirements, and from our requirements, how we're going to sort of achieve that requirement from a customer. If the customer wants something, we have to sort of work out the requirements, and from the requirements, which has how we're going to do it execute it, and also how do we sort of test it and verify that we have achieved that customer need. So it's a very that type of aspect of it. So yeah, correct. So very similar. Yep.
It's interesting because it is a type of mindset that I can see works very well with investing in property. And we always used to joke around because I tend to be big picture, not as detailed. And I've had to, in learning to coach people like yourself, engineers and more detailed people, I've had to learn to be able to talk detail and to analyze detail. Whereas naturally, I'm not that person. Naturally, I'm big picture and I like to focus on chunking stuff. And we always used to joke around because Jason used to say, I don't know why you've got so many engineering clients. He said, you're not detailed. Why do they come to you? And sometimes it's opposites attract, right? Sometimes
Correct.
you need
Exactly.
the stuff that you may not be as strong in. But it's, yeah, I've had to learn to work with engineers and to get right into that detail, as I'm sure many of our coaches have. And so you have a goal of 100K passive income in retirement, which is an awesome, awesome goal.
Yep.
And so when we're coaching, basically how we work that out from a big picture perspective, not from an engineering detailed perspective, is we go, okay, well, if we've got an income of 100K, how much property do you need in order to create that? So we divide that by 5% being the rental return you'll get on the property. And we go, right, you need around 2 million and probably a bit extra as well for, you know, to allow for stuff like the property management fees, your insurances,
insurances,
all of that. Yep. And so, you know, congratulations, because you've got 6 properties and around 2.6 million in value. So you're actually exactly where you need to be now in order to achieve your goals. And now it's just about letting those properties mature, paying down a bit of debt. So that's an outstanding achievement. So firstly, I wanted to recognize that.
Oh, thanks.
Congratulations. Congratulations.
The team effort. It's not the individual effort, but yeah.
Well, that is true. And regardless if you're with Positive Real Estate or not, having a team around you is critical to success. And who outside of Positive, because everyone knows obviously you're part of Positive Real Estate, what sort of team members would you suggest are critical to somebody's success?
Offers like definitely. I think the combination of the 6-star team definitely would offer you need to have your mortgage broker, you need to have your accountant, you need to have your legal, you need to have your real estate agents, you need to have your financial planners, and a fair few more. And obviously need to have a mentor or a coach or someone, or at least someone that is sort of like-minded that you can sort of talk about things. But yeah, so they are the group that I've learned to gather and it's like and develop.
Because along your journey, it hasn't always been straightforward. So, and you've been very open, and I thank you for this, because often, you know, when we pick up the magazines about property investing, you hear all the stories about, you know, people have achieved amazing things, which is awesome, but we don't get the full story always. We don't get the rough and tumble that sometimes comes with property investing. And so tell me, what was one of your biggest lessons with property investing?
Yeah, so one of my biggest lessons, obviously, this is prior joining PRE, where I've acquired 2 properties. I bought one existing in Adelaide, and the second one was a property deal that didn't go to plan. So I bought this in Tasmania. Yes, the word Tasmania, and obviously I bought it through a sort of one of those property type selling. They're sort of selling property, saying was the best deal. They sort of sold it as as this is, and they showed me the exact what entering the numbers, the projection, 10 years, and so forth. As sort of a young investor, I said, okay, really, if it's really cash flow, because it's one of those government backed deal off the plan unit in an area in Tasmania close to the water. So of myself, I've looked at the sort of fell into the marketing scheme of that. I end up signing off the plan deal, not understanding much about it, and sign it up. And like I said, once I signed up the deal, I had initially the main challenge was of the off the plan. So it was, I didn't realize it was a 2 years build to get finance. So obviously as it got built and so forth in time, getting updates was a challenging thing because trying to get update from the company was challenging, and then realizing that one day I would say, oh, the company that built the place went bust, went out of thing, and as a new investor, you go, what does that mean? What that mean? You're wondering like, okay, so busted, will my place get built or not? You know what I mean? Like, does that mean I lose my deposit and so forth? And it's all that for like, and then the the place would bring me saying that they would obviously have to try to find a replacement builder, and during that time it actually took, so once they did that process, it apparently took more than 2 years to get built or settled, like probably 2+ years, 3, maybe I think it was a 3. I remember during that time I also did lose my job, a redundancy period, so it sort
That's
of
right.
was in that transit, but the blessing was like that since that delay, it sort of helped me find a job quickly enough before they was able to build it, to finish it. So once they finished
Right.
it was okay, but like I said, it's just the challenges. And then once it got built and I went to get finance, which is like I said, I didn't understand off the plan, so I said, okay, you get finance, okay, fair enough. So I went to finance, and the bank valued it much lower than what it was originally bought for. So I bought it for
Right.
207, and the bank valued it at uh, at 178. And then and also, since it was a government backed thing, the bank goes to, goes, we don't want you, we don't want 10%, we want you to put 20% into the deal. So
Right.
I literally had to go, oh crap, I don't have this money just lying around. I didn't plan for it. I thought maybe it was a 10%, and and that's it. So I literally
Mm.
had to. The blessing was I did have my first property and had a certain amount of equity, so I had to redraw the equity in that first property deal to get the second
Right.
deal over the line. So
Mm.
obviously once it settled, and obviously went through, and like I said, in hindsight, of the I as it's a lesson learned, there's always challenges you go through, but it does sort of help you sort of get your mind ready, or like deal with those situations. Like it sort of helps. It's sort of one of the things I took action, but then obviously I didn't really do my due diligence and so forth, and I think you just ride through the challenges, and it comes as each day comes. It's just part of property investing. As you deal with the challenge, I feel you grow and be more mature, and you understand sort of the challenges, what is really worth, what's the worst case scenario, what's the thing, and so forth. So yeah, so in a day, I still have that property from today, so it's still holding well, even though it didn't do too well. Eventually, I think time does heal, even from not very great properties. Time does heal all properties. So yeah, yeah. So
It
yeah,
often does. It often
yep,
does. There's nothing like holding property. I had some
yep,
property in a regional town that I bought in my early days investing, and I held it for years, and it
yep.
didn't do much. And
Correct.
it was in an area where there wasn't a lot of wage growth, and
Exactly.
and that was challenging. And then the market went down, and and rents were, it was hard to get renters in, so I had to drop my rent. And you do, as a beginner investor, often if you don't have an experienced hand to bounce off, when you start having these challenges, what are normal problems become really stressful because you're doing it on your own in a vacuum. Is that what you found?
Exactly the point. Yep. Yep. Obviously,
Yeah.
so like I said, in my case, like it's just happened that I was lucky that I didn't lose my. Or there's a probably worse case that I could have probably lost my deposit, but I just and
Yeah.
also especially when during the time I lost my job, I wasn't able to get finance during that time. It's just happened the coincidence that I came out of the stressful experience, but not as bad. But even if I had lost the deposit so forth, then yeah, it would have been a experience as well, a learning experience that goes come from, yeah. So, but like I said, there are better ways. Like I said, that's why from that experience, I said that I had to like work out a team or someone that you can bounce off ideas off, someone you can talk to, and get that sort of second opinion that sort of done that and understand what the details. Like that as an engineer, trying to understand the details and lesson learned and so forth. What does an off the plan deal mean? What's the potential risk and what's the potential worst case scenario? So forth. Having those scenarios in place and how you're going to mitigate those risks that you have to have at least a rough idea plan,
Yeah.
and so that you can sort of understand when challenges does occur. What's the worst case scenario? How you deal with it? How can you mitigate against that?
Absolutely.
Mm-hmm.
Yeah,
Yeah.
mitigating risk is massive,
Correct.
and I think what the team have learned to do really well over the last, I mean, positive real estate's been around close to 20 years, if not longer, and after coaching so many people over so long, I think, there's some lessons that come out of that as well. And one of the key things that Positive and the coaches learned was that making sure clients understood not only why something was a good deal or why an investment might work for them, but also what is the trade-off? What is the risk in this deal? So you've got an off the plan at the moment coming up.
Correct.
A blue chip, fantastic off the plan in Brisbane, and which you'll do very well out of. There are similar risks to the first one that you did where it was a challenging result for you. It's going to be a certain amount of time off the plan. We're in an environment where we are seeing builders go under, and due to stuff outside their control with COVID, materials being expensive, labor hard to get, but thankfully one of the things Positive learned is we don't deal with small people as far as small backyard developers, people cutting corners, people that don't have substantial kitties to be able to weather challenges. And so the developer that you're working with is one of Australia's top developers. And so they're able, when they have a challenge with the builder, they're able to just come in and sort it out. They're able, if they had to wipe their own profit if they needed to get a builder in at a more expensive cost, because they are so established that that's not going to impact them. And so there's a safety net there, obviously, for clients in that space. And so understanding your risk, mitigating your risk, but then what I'm really interested in with yourself was your ability, even though you had quite a scary experience at the time relative to your situation, you were still brave enough, and I'll use that word deliberately, brave enough to move forward and say, okay, I had a bit of a hard experience, but there's still merit in investing in property. So what was your thinking around that? Because that's what I call an investor mindset. Yeah. What was your thinking around that?
Like I said, probably goes back to I have thought about investing as when I started my first job. I realized that at a younger age, I realized that my superannuation wasn't really going to cut it. It's a sort of I found was a bit of a false thing with the government contributing. So I realized, and also my work, and do I really want to work till I am old and so forth? And I during that time, my early stages, I said that there has to be a way of investing. So like I said, I've sort of looked at investing as a young age and saying like, what does people invest in? Can they invest in shares, property, what else they can do, and that's what else, and other things, or starting your own business, so forth. But first said for I looked at what was the most sort of more easier approach. I looked at shares and property was the two things that I looked at. But then I looked at and the share was a bit too complicated with all the ziggy-zaggy lines up and down. It was hard to read. Property at least was sort of a bit more understandable and more relatable. So
Yeah.
I chose property. And like I said, when you said the challenges of even though I faced all those challenges, I still, the mindset I had was like investing. I had to sort of put aside or invest or have a way to invest one form or another to make so that that I can have enjoy of the sacrifice now to enjoy my life later on a bit more easier and so forth. So even though I faced those challenges, I said today, what's the worst case that could happen? I just lose some. I know it sounds bad. I'm just lose some money. You know what I mean? But it's just money. What is money? It's just a piece of paper that it's just a piece of paper of our, expressing our effort that we exchange at work. You know what I mean? So I'm just saying to myself, what's the worst case I could do? I still have my job. I still live. I'm still healthy, and so as I said, why not have a crack at investing and see how it goes? You know what I mean? I know that's even though the challenges of it has, it's something that I think it comes down also as a bit of a passion as well, or maybe a bit of enjoyment of investing. I know it's a bit of you have to enjoy what, if you're investing, you might as well enjoy what you're investing in.
Absolutely.
You know what I mean?
Absolutely.
Not then
Absolutely.
what's the point? I think that's the combination of that type of thinking and obviously understand that I want to invest to obviously have a better superannuation and get down the track. If it's not properly, then what else is the best thing? But I find property is probably the better way where you can obviously continue to do your job and you can choose to obviously depending on how your risk appetite is or how you want to do. You want a passive approach, then buy and hold. If you want to be a bit more flexible, probably if you want to be more active, you can be renovating or adding things. So it's or vice versa, subdivide, develop, whatever you want to do. So it's quite a lot of different things that can come through investing in property. So I chose property investing, and I choose to obviously, like I said, like in a day, it's just understanding your risks and what are the potential worst case scenarios, and can you live from those worst case scenarios ever eventuating, you know what I mean?
Yeah, that's a great way of looking at it.
Yep.
And I mean, it's obviously served you well because, you've done really well. And I think, so when we coach at Positive, it's all about how do we measure your success. So we'll often talk about, so what are your goals? What are you wanting to achieve? Then we'll put a dollar value on that. So we have a target, and your target was the 100,000 in retirement, or one of your targets was 100,000. So that then gives us a value of property that we know you need to acquire. And then you go, right, if it's $2 to $2.5 million of property that Andrew needs, then what's Andrew comfortable at purchasing at? So it might be 400, 600, whatever the number is. And then we just divide that amount by that number to give us, well, you need 4 properties, you need 6 properties. And then we'll set about putting together a strategy. So where to buy, what price point, etc. Now that changes over time as markets change and so forth, as you know. But it makes it easy if we go through that process, because then we can measure. So this property that you're doing at the moment, the off the plan that's going to settle, when does that settle? 12 months?
Yep. So it should be scheduled for the end of this year or late first quarter next year. So
okay.
2023.
Sure. So when you're going through the process of, is this a good property for me to buy? It's like, well, we can weigh it up against, is it going to get you closer to your goal? So, and this is why it's going to get you closer to your goal. And these are the trade-offs. So this is what you have to manage. Can something go wrong? A builder go bust, or or a delay in in the construction of it, or does the market go sideways in that time? Does your situation change? So all of these conversations is, guys, why we have coaches, because you get to bounce those scenarios and make sure that you're comfortable with the level of risk looking at this deal. Like, somebody may not be comfortable with that. And so, Andrew, we'd say to them, well, an off the plan is not a strategy for you. You need to do something else, a house and land or an existing deal. But for you, because you've built up that experience and you've been through it once before, and you know what happens when it goes sideways,
Exactly.
you were comfortable, which I think is awesome. But not all your stories have been challenges. So shortly after joining Positive Real Estate, you purchased a house and land. Is that correct? In Mudgee? Yep.
Original area. So they bought back then. So I bought a house and land for, back then was like $375. Back then, it's okay.
And cheap, isn't it, when you look back?
I know, back then so cheap, and then I realized really how could that grow? I think, but now I think of in this market of holding that long, the rent returns are pretty high there as well. So it's reasonably cash flow positive. So it's like renting for $500 a week, and I think now it's probably in value in this market. It's probably at 700. The low 700K in this current market. So
that's awesome.
That's, you can work out numbers. So that's the equity. So that would help a lot.
And so that it stands to reason. So it's probably done its thing where it's doubled in that 10-year time frame, which is, that's best case. Well, not best case, but it's a very good case, because property doesn't always double in value every 10 years. It's interesting. There's often these sort of rudimentary comments that are passed around, like, all property in Australia doubles every 10 years. It's like, well, no. Some will double in 7.
Not anymore. Basically, when I think was the reason why it's 10 years, because back then when I think there was a single income, and once they recognized the other partner's income, that's when it was sort of a doubling in 10 years. Because like I said, the rule of 72, if you want something to double, had to grow a certain amount. So if it's 10 years, the growth has to be at least 10% per annum for it to double. That amount.
Nuts.
But more realistically, 5% is what we try to. Well, I try to think of how it is, 4 to 5 worst case scenario. I mean, so so at least 15 plus years for it to double almost.
Correct. So now, you do get the stuff that outperforms. So often that's simply luck, people timing markets. It's like the share market. It's very hard to say, these are all the fundamentals of the market, so that means it's definitely going to go up. Unfortunately, I don't think any market works like that. Brisbane, case in point, it had everything going for it, all the fundamentals, but it took a good 10 years, maybe even longer, before it actually started its boom. Whereas normally, if you were to generalize, you'd say around the 7-year time frame, it might have started doing its thing. But that just doesn't really hold true anymore. And I think, you will get those properties that double in short periods of time. And then most property across Australia, maybe every 12 to 15 years. And I think one of the things I liked in the notes, because obviously we get people to have a bit of a think about what they want to share in these podcasts. And I saw somewhere in these notes, now I'm not going to be able to see it, you were saying that, where's it gone? Of course, I've lost it. That it is a long-term strategy. Like, there's no get rich quick here. It's long-term. And can you impact that? Like you said, if you want to not be as passive, you can get in there. You can do a subdivision, you can do a renovation, you can... there's all sorts of stuff you can do to shorten that time frame and to add value. But if you're busy and you want to be more of a passive investor, there's no completely passive in property, then buy and hold. There's absolutely nothing wrong with buy and hold. I'm a massive proponent of buy and hold. I think that's a fantastic option. And so what would you say to somebody watching this video that is thinking about getting started, wants to invest in property, but everyone around them is saying, oh, don't invest in property, the market's too hot, or, you know, there's a war overseas, or there's something, everyone's fearful. There's all the barbecue stories as to why not to do something. We all know those people. Yep. What would you say?
I'll say to ask them, what are you fearful of? Understand why are you fearful? Ask the question myself, what so and so are saying, why are you fearful of it? Then work out what are the opportunities, what are the downside, or what are the risks. I keep saying, what are the risks and what's your worst case scenario? It could happen, you know what I mean? So
yeah,
in the day, so I just try to be pragmatic about it. Look at what are you fear, asking yourself, and then if like I said, also hang around in a group where someone you can talk to that in the same mindset as you. I understand when you talk to maybe the wrong people that don't have, think they'll probably say, you shouldn't invest in property, it's a bad idea, blah. But when you find someone you can have the same common interest and thing, it does help sort of like, so that have that opportunity mindset, having that, when you talk to someone that is at the same sense, that understand that you can really sort of work out how to move, sort of, instead of being stagnant and holding and being fearful, you actually see the opportunities and maybe have that bravery to make that step, or make that action, or take that first step.
100%.
And that's what it just comes down to your group. Exactly. It's like same thing in probably news. You choose what you know. I don't read most of the news. Sometimes it's all negative or positive. Just depends on the perspective. So like I said, the investing is something that in the day I just say, like, I don't want to work for the rest of my life in my job that's not gonna really provide for me. It's unfortunately that's the facts of working in a 9-to-5 job. You're not going to earn, you're not going to save yourself to become wealthy. It only has to be done through some form of investing, or you going out doing a business or so forth. So the questions are, so do you want the question is what do you want at your end stage of your retirement, or do you want to have choices and so forth? So ask yourself those questions. Ask yourself, what's holding you back? Do you want to be like everyone else and just follow the rat race that everyone's running around? So it's up to you. But it's not up to you today. But that's what I just think about the opportunities, and go out there. What's the worst case that can happen? Just be back in your normal job. That's what I would say.
I like your way of thinking. I like you're essentially doing a SWOT, aren't you? So you're doing an analysis on what is the risk, how are you going to mitigate it, what's the opportunity.
What question? What you're fearful? What's your risk? What's your opportunity? What's your worst case scenario? And then see if you can live with it. It depends. That's when where you to ask yourself, how risk adverse are you? Can you live with that situation? Can you lose that money? Can you think? It all depends on your appetite for risk. So some people might be a bit more safer. Then okay, maybe you want to do this. You mean? So it's just exactly the same. But what you were saying, how like if you want passive, more safer, or you want off the plan a bit more riskier and so forth. So
or just a bit more involved. And I know I've had some clients that have joined our program and been very fearful. Like they've even been fearful of joining the program itself and paying for the program, and then they've gone through the process of finding out about finance, and often there's fear around debt, like having a certain amount of debt, and they're like, oh, if I lose my job, if I So And it's really interesting seeing as people go through the program how they blossom once they understand more. So obviously education is really important, but
Yep.
it's not useful unless you apply that education and that knowledge. And then having someone to ring and just sense check stuff is useful when you're suddenly doubting something. And then once they go through and actually purchase something and overcome that fear and pop out the other side, it's amazing how much people change having had that bit of success. So some really good points there. And so other than what we've covered, is there anything else that I've missed talking about that you particularly wanted to share with people that, might be thinking about investing? Otherwise, I'm going to ask you that classic, what advice would you give your younger self? But is there anything else that we've missed along the way in this conversation you wanted to share?
Pretty much what we covered most. If you think about investing, then I said just go and obviously find the right. I think like sum up, find the right like-minded of people, and then from there understand the knowledge that you have and build up that team. I think obviously important to have a mentor or coach, if not someone at least you can share the journey or have done that situation before you or done that sort of success, or someone that you want to talk to someone that done that, you know what I mean? So there's no point in talking to someone that hasn't seemed to say this and say that, but yet, and obviously then do that, and then obviously take action and really work out what you just take action, and challenges will come. Challenges will come with investing, even though you can plan and really get what you want, it will come. But hopefully I think you find as you go through them, if you really think investing really go, you'll work through them and use them as experience, and you'll get stronger as you move forward.
Yeah. I always liken it to going to the gym. It's like you go to the gym, the first few times it really hurts and you get sore muscles and you wonder why on earth you're doing it. And then after that, it gets easier and you get stronger and your what's it called? Comfort zone expands, right?
Exactly.
So back to that classic question, if you could give your younger self some advice, knowing what you know today, what would you say to young Andrew?
Yeah, exactly what I said. I should have joined at least have a coach or a mentor earlier, and also would have been a bit more of and from there obviously to acquire more property. I could, as I find out, as we're just saying, as it gets harder to acquire more property as me moving forward on, property just goes up, and then of the APRA comes in, borrowing capacity gets seen. It was much more easier back in though it wasn't. If you're back in your younger self, it's not this thing, but there's challenges that I should have acquired more at my younger age. Gives you time, and the more time, property will do work over time. So as you get older, you have less time because you can't live that long, you know what I mean? So if you can live like maybe 200 years, and maybe it's 45, but it's probably too mature.
Mm-hmm. Yeah, so we could all be like vampires and live 200 years or something.
Yep, exactly. So
we'd all be mega wealthy. Mm-hmm. Yes, I saw one of your things was to definitely start investing earlier. So, and that seems to be a very common thread for people. Buy more quality investment properties. And I thought the other note that you had here that was really important was treat your property investment as a business.
Yes. Oh, yep, absolutely. Yep. So the numbers, I do budgets, and I do run through and do keep track of rentals, keep track of your growth, and then and obviously keep on top of your paperwork for tax time as well. Yes. I find out the more property you have, the more admin work you have maintaining the
It's true. And I often say to clients, when you get to 4 or more properties, like if it's taking you forever, don't be shy about hiring a bookkeeper. Like I'm a big fan of making sure that the stuff that is not dollar productive for me is, tax savings are always dollar productive, but, take those tasks that you can pass on if you can. Work out what it will cost you, because time is our biggest asset, right? And if you're spending your weekends doing your paperwork, that's not a lot of fun. Hand off what you can to professionals.
Yeah, okay.
I'm a big fan. Unless, of course, you've got good systems. And I think with technology, and, there's some awesome software out there. And with technology, it's made it a lot easier. Back in the day, I used to have big folders of all the statements.
Electronic
that was
stuff.
hard.
Yeah.
Yeah, so many clients would say, "Oh, what do I do with all of this?" And I'd bring in a big box full of just paper. I was like, "Mate, you need to go down to Officeworks and get some folders." But thankfully, those days are over. All righty. Well, I think that's it for us today. So thank you so much, and some good takeaways there. Start investing earlier, buy quality property. Don't be put off by a couple of bumps and scrapes and some challenges, and they may seem big in the moment and at the time. But if you've got a team around you, you've got your experts, then all of that makes it easier. Don't be deterred if you have a difficult experience. It's all about building muscle and getting back on the horse and learning to do it properly. What we aim to do here at Positive, of course, is to take away some of that painful learning by trial and error that many of us go through, because, we hope that you're learning from, all our team are quality investors. They've all invested. And so we aim to teach you as much what not to do as what to do. And I think that works well for our clients. So, Andrew, thank you so much for your time. Really appreciate it. And I'm sure I'll see you at a mentoring workshop soon.
Yep, sounds good. Thanks, Deborah.
Awesome. Thanks, Andrew. Take care. Bye for now.
Bye.
Hey, thanks for listening to Property Investor Tales. Remember to subscribe so you get notified every time a new episode drops. As you can guess, I love hearing people's property investor tales. So if you'd like to share yours, then please get in touch with me via email at propertyinvestortales@positivementor.com.au. We would also love your feedback, and I would appreciate a 5-star review over on Apple Podcasts or Spotify. Remember, you can watch all of these podcasts over on YouTube at Positive Mentor or at positivementor.com.au. Until then, take care, happy investing, and bye for now.